to start with welcome to everyone. And I'm Joe with Eagle Tax Res. We'd like to welcome you to a little Q&A session we have here. In my reputation, I'm an enrolled agent. I constantly work on cases. We have locations from Honolulu all the way through Georgia. And Lucy here we collaborate a lot with. And I'll let Lucy explain to you a little bit about herself and her company.
I'm Lucy Petry. I'm the founder of the Petry Law Firm, and I am dually licensed as both a CPA and as a tax attorney, and I'm also a tax law professor, and tax is my jam.
Well, those of you who know, follow us, you know that tax is my jam as well. So we've been talking, and Lucy joined us out here in beautiful Honolulu, Hawaii, and we've had the opportunity to talk about some cases. And what has come up constantly is the questions that we get when people call us.
And we get the same questions.
It's the same
all
questions.
The time.
And so what we do is we have Christy here with Eagle Tax Res, who's going to ask some of those questions, and we will go over what we answer. And we'll just banter at it. We'll go
Sounds
from there.
great.
Christy?
Okay, all right. So one of the most famous questions that we get is, am I going to jail?
I love that question. I do love that question because I can make the client feel immediately better by answering this question. And they will come into my office and they'll be like really scared and really worried and afraid. And the reality is you're not likely to go to jail for failing to file your taxes, because somebody might come to the door and say, I haven't filed in 10 years, am I gonna go to jail? Or I am a little bit behind on my taxes, am I gonna go to jail? And you're probably not going to go to jail for that. But if you are intentionally avoiding or intentionally depriving the government of its money, and you're doing this over and over, and it goes beyond making a mistake or just falling behind, and you're doing this intentionally, and you're not fixing the problems, then you may have a criminal case, you may have a criminal situation.
And I look at it, so I have kids. So when we talk about our kids doing things they're not supposed to be doing, I was probably, even though I'm a retired Marine, I was probably the pushover parent. So, they get grounded and that's it. They didn't clean their room, they didn't do something, their chores they're supposed to do, and they get grounded. And I'm like, well, if they're grounded, I've got to stay home and watch them. So you know what? If you do what you're supposed to do and get everything fixed, we're going to have some leniency on you.
Mm-hmm.
And that's how I look at the IRS. They're going to have leniency on you as far as you going to jail if you get yourself into compliance. A lot of the audits that we see, a lot of the things that are happening with revenue officers, the goal is to get them into compliance.
Mm-hmm.
And to me that segues into something else, but the bottom line is most people aren't going to jail. If there's a threat and you come to a company like mine where I'm not the lawyer, then we contact Lucy, and that's where our whole agreement came along. Lucy will pull you into an agreement with her firm, so we have some privilege and things like that work out, and we can take care of it.
So we can protect you.
Yeah, protect the client.
Yeah.
And that's really what the goal is. We're trying to take care of our clients. That is our main focus here, is to protect people and help you get things right. But when we talk about compliance, that kind of segues into another question we get a lot is, I haven't filed taxes in 15 years, right? And I know that's one of Christy's questions over here. So what do you do?
Well, compliance. I think one mistake that people make is to try and go to their practitioner, to their tax practitioner, or go and try and do it themselves and file all those years that they haven't filed. It's a common mistake that I see over and over and over, and it drives me insane. You do not, most of the time, you do not have to, you do not want to file all the years of tax returns. There is it's an internal policy. It's not a law. It's an internal policy of the IRS. It only requires the last 6 years of tax returns. So if you owed for 10 years and you filed 10 years when you only needed to file 6,
The IRS says, thank you.
and now you owe the money,
Yeah.
which if you had not filed the oldest 4 years, you would not have that liability. But not everybody knows this. If you go to H&R Block, they're not going to know. They probably want you to get paid to prepare those extra tax returns, and now you have unnecessary tax liability.
Yeah, we see it all the time. I mean, people come in and they went to their tax practitioner or whatever it is, and that's where we network with a lot of CPAs to give us referrals. Someone walks in and says, I haven't filed in years, and they look at them and they're like, here, call Joe. We consult them, we figure out where they're at. If it's let's say they're qualified for some type of offer, a significant reduction because they just don't have it now. Maybe they made money 5-10 years ago, but now they just don't have it. So when we look at that, we know how we can file those returns, how we can get them into compliance, and then we can move on to a resolution of whatever that may be. Now, we know right off the bat they're going to be able to pay their taxes, then our goal is to go into a little bit more detail. If they have a business, a little bit more deeper dive in those bookkeeping to make sure that we lower their tax liability.
Mm-hmm.
But if not, it's more getting them to compliance so that we can move on.
You have a good point on the lowering the tax liability and the compliance. Whenever I take on a case, I do a few things. I do investigation, looking at the transcripts, history, reviewing tax returns. I also look to see if there's an advantage or a way to reduce the tax liability. Sometimes the tax returns were prepared incorrectly. Sometimes I can change things to make to reduce the tax liability, or whether penalty abatement, ask for forgiveness of the penalties, if it is in the interest of the client. So we will investigate, we'll review the documents, review tax returns, ask for penalty abatement, reduce the tax liability if it's necessary or if it's worth it, and then we decide on a strategy for the case. And I think that there are only so many things you can do. You can pay, you can ignore and suffer the consequences. You can enter into installment agreements, you can ask for temporary suspension of collections, or you can ask for forgiveness. Did I leave anything out?
No. Well, I mean, in the paying, there's options as far as paying, whether you're going to full pay over, the IRS has 10 years from the time you file a return. And that 10 years is called the collection statute expiration date. So the CSAT is really important because, if someone had, let's say they didn't file their return in 2014. So in 2014, they skipped that return. Or let's say 2013 is a better example right now. 2013, they didn't file their return. So what happens is the IRS, that return was due in 2014. So the IRS gives you a couple years to fix it, like file your return. And then they see maybe you had self-employment income, a 1099K, money was coming in. So after those couple years, the IRS starts sending letters, hey, we think you need to file a return. That's the first letter. And then it's, no, you need to file a return. And then it's, we're going to create a return for you.
It's never good.
And then and all they're doing is taking exactly what your transcript says, putting it on a form, and then they call it an audit, but basically what it does, it goes to the department, Pennsylvania, I believe, usually, and then it comes back and says, this is your return, and they send you what's called a notice of deficiency with your results.
Your bill, yeah.
And here's your bill, and then how long do you have to respond?
30, 60, 90 days.
Yep. And then what happens after you don't respond?
Then you're assessed to go to collections.
So the tax assessed. So that is when your statute of collection starts on a case like that. So let's say that 2013, it was due in 14, now we're in 16. It could be the end of 16, it might be beginning of 17, and let's say they assessed $100,000 in penalties. Well, we're in 2025 right now, and maybe you're in collections and they're looking at this. So what happens if you go, and we see this all the time, you get that really smart person that's preparing your taxes and they say, we can lower this liability. What happens with that if they file a brand new return?
Oh my God, you start over.
You start the collection statute all over.
Yeah.
So, my wife Christy, what did you call it? The jigsaw puzzle or the chess game?
Chess game.
She calls it the chess game. And that's what we do every day. We play the chess game. We're looking at it and we're deciding strategically how we make moves.
Mm-hmm.
You know, and myself as a Marine, I've been in combat and it's all tactical. Everything we do is tactical. We make decisions based on what the consequences is going to be, and we want the best result for you, the client. So if we look at it and we say, you're at this level in collections and we know that we can wait a little bit longer, and then maybe we can delay it a little bit with a extension of time. We can request for a delay in collections, and that will put you really close to where they can now, maybe we fill out that payment arrangement and you make 2 payments on that, and then you're done because you can't afford to make higher payments.
On that note, I have a question for you.
Okay.
Why should I not just call the numbers that I see on TV for the big, I don't want to say the name, but
Those guys.
Those
For those
guys.
guys.
You hear on the radio, you see on TV. What's
Okay,
the difference?
I'm going to generally profile. So a lot of the larger tax return mills, resolution mills, I'm sorry, what's the proper word?
Maybe
High volume.
High volume.
High
okay,
volume,
yeah.
that's a good word. Okay, so they spend a lot of money on advertising, they're bringing you in, they're charging you, my favorite side, I'm paying $300 a month, and I paid $300, I don't know why they haven't fixed my problem yet. First of all, I know your billing rate's more than $300 for an hour, so you're not going to get this level of representation at that price, okay? So, and we'll talk about price later if we need to, but the reality is a lot of those larger groups have a bunch of admin people. And all those admin people are doing is filling out paperwork, and they're pushing them through, and the attorney or the enrolled agent that is in charge of reviewing them is seeing hundreds of cases a day, and they're signing them off, and they're setting off the paperwork, and they're saying, good luck, I hope this works.
So they don't even look into whether they qualify or not?
No, they're not,
Or they're not going to examine the statute of limitations, they're not going to try and lower your tax liability?
or they're not looking at your, they're not looking at what you're paying to make sure that, we just lost it. You wanna hit the red button on top again? I set it for an hour. That one's still recording though. There you go again.
So they're not going to apply the strategies that you would apply, they're not going to, they've been looking.
It's the difference between driving a Miata as a sports car or driving a Mercedes-Benz or a convertible Bentley. The service is going to be different. It's a different experience.
A problem that I have with some of these companies is that they will file they will request forgiveness or not for a compromise, but it basically means a forgiveness of the liability. And when you apply for that forgiveness, during the time that the IRS is analyzing, evaluating your request, it stops the running of that statute of limitations on collection. So it just extends the time the IRS has to come after you for payment.
Yeah.
So if you keep filing those over and over, which some of the companies will, even if there's no merit to the request, you could end up extending the statute of limitations for like a decade. Whereas if you had worked with somebody who knew what they were doing, that would have been done and over with a long time ago. So I get this really old tax liabilities, and then I go and I look, see why is this still, why is the IRS still trying to collect on this? And then I see it on the transcripts that they had this improper request for forgiveness, and it just dragged it on.
We had one where they had done their own offer and compromise, and then they're dual citizens, so they left the country, and the IRS tried to respond to the offer of compromise, and when they reached someone, they told them that they're out of the country. So the IRS sent it back as denied, and then they put a flag in the system that this person was no longer in the country. So when they came back in the country, and then 8 years later, they're saying, hey, this should have expired, and we actually had to go in and get copies of literally the records for this individual. We did a FOIA request and got all the records.
And FOIA is a Freedom of Information request.
Thank you. I'm a Marine. I speak acronyms. So we get this request, and I'm reading the series of events that happen here. And I call my client up, and I'm like, I asked him, did you say this? He's like, well, yeah. I'm like, okay, well. Then we get, and luckily that was back when they actually stamped passports.
Oh, yeah.
So I could get when his passport was stamped when he came back in the US, and I was able to use that. And I requested the IRS to recalculate it, and $200,000 went poof, because they could collect it, and he actually had income that we could prove that was in the US, and that's how we were able to resolve it. But
so hiring you saved them $200,000 or so.
yes,
Yeah.
in that case. So again, it's important to talk to someone who's going to strategize and work with you, and that brings up another thought in my mind when you talk about some of the big groups. When you pick up the phone, you call somebody, they should be able to have a 20-minute conversation with you, and it takes a little time. That's why we always say, give us a call. Don't just send a text. My favorite, is, someone's just like, they send you a text and it's like, I want help. And I'm like, well, let's have a conversation, because if I don't understand what's going on, I can't give you a quote, I can't give you information, I can't come up with a plan for what we can do without having a good understanding of what's going on. And, really that's what's important, is you talking to somebody, not a salesperson who is just trying to sell you, into joining that group or into paying for them or, sending them money. You're talking to someone who's a licensed professional who can give you a quote based on what's really going on. Now, I know you have a lot of larger payroll corporation stuff, and you have to do the investigation. When we get those, we do the same way, but when we have the smaller ones, we can quote it right there on the spot. This is how much it's going to cost you for us to fix your tax problem based on what you're telling me in this 20-minute, 30-minute phone call. And we move on from there.
Chrissy, did you have more questions?
I actually did, but you guys covered most everything
Oh,
that I had. But let's switch gears a little bit. What about preventing the tax problem? How can they pay less?
Oh my goodness. Okay, so I could spend a whole semester,
She's a teacher.
go teaching how to pay less taxes, because it is so complex. It's so different for everybody. There are a million ways to do it, or a million wrong ways to do it. I think it is definitely like a puzzle, where you are putting a picture together and you change something here and you move something elsewhere. But there are ways to do it legally. There are ways to reduce your tax liability without doing anything shady, whether it's through changing. I mean, I do see a lot of shady. So
we see a lot, right?
Yeah, a lot of shenanigans. And but sometimes I look at a tax return and say, "Oh, honey, you don't have to do this. There are better ways to do this legally."
But wait, I have an LLC.
Oh my goodness! Yeah, let's get an LLC so we can deduct. I don't know, you name it, deduct whatever you want to deduct that day. And one that I get a lot from the ladies. I have an LLC, so I can deduct my nails, my hair, my clothes, my shopping. I get that a lot. Do you ever have people trying to deduct ridiculous stuff? Oh, the dog is making a resurgence now. This year I've been asked a couple of times about the dog.
There might be a TikTok dance for that. Maybe that's why there's a TikTok dance where you pull your dog up and now you using your dog as a deduction.
Right now it's a deduction, yeah.
It might be a deduction against the money you make from TikTok, which I know a lot of people don't make money from that. So, but other than that, that dog is not a deduction.
Yeah.
And you know, there's a lot of creative. I mean, it's actually entertaining, some of the stuff we get to hear every day.
Yes.
And you know, I need you guys to watch out for Christie's, what did you call it? The
Palm hat.
Oh my goodness kind of question, because you know, I look at her, sometimes I look over her desk and she's looking at someone's financial and I see that and I'm like, what is it? And you know, she's gonna start recording videos for you, so I promise that one. We look forward to seeing those, but it's like they're trying to write off in their business just all kinds of, they just put in a new swimming pool.
There's a tax law case for that.
There's a case for that. They put in a new swimming pool because it's you know, they work long hours, so they need
Really?
Office upgrade.
they need to have an office upgrade.
Oh my goodness, I need that.
Yeah.
I work long hours.
What's going on with this thing? At least the phone's still recording.
Need a new one.
There we go. All right, we're back on.
But so one of my go-to tax savings or tax strategies is look at the entity structure. Sometimes the business is in the wrong type of entity and it's causing them to pay more taxes than they need to.
Or pay more fees than they need to, because we get clients.
So true, yeah.
We get clients that come from a, you know, small town, whatever it is, and they've gone to this guy's been their tax preparer for years,
Yeah.
and they, next thing you know, they're like, hey, we're gonna set you up. They're making $20,000 a year bottom line, and they set them up as an S corporation. So now they're paying, or a partnership with a husband and wife.
Oh my goodness, yes.
You know, you're married, you don't need to be a partnership. Okay, I'm just gonna put that out there right now.
Right.
Okay,
Right.
especially in the community property state.
Exactly.
Like, but again, so these are, I hate to say it, but it is, but the reality, I'm blunt. So they're getting screwed by their tax person, because that tax person is now saying, you need to have payroll and you need to pay me for doing your payroll.
Right.
You need to pay me for doing the extra tax return. You need to pay me for the bookkeeping for your business. And if you're not getting a savings from that entity, you shouldn't have that entity.
So true.
And then we have, you know, we call them serial LLC makers. We have those people that come up and, you know, with BOI now they're having to go report all these entities and finding all these entities
Or
that
if you're in
exist.
California, you have to pay to have those entities
California, a couple other states, you're actually
Yeah.
paying every year
for the
that,
privilege of
for,
having a
for the entity. So, you know, if you like giving money to California, I mean, go ahead, open up as many as you want. I mean, they appreciate your money, they will take it.
They will, yeah.
And they'll be happy about it. And you have to file a separate return in California.
Right.
You know, the 568 tax return for that, because, you know, that, and again, that's extra fees.
And you have to do it whether you have activity or not.
Yep, it has to be zero, whether it's zero or not. And we've gone back and fixed those. You know, we see those all the time. But you know, basically the entity is super important. So in my firm, we do tax planning. And it's not one of our main services, but we add it on when we have a client that we recognize that they basically are paying too much in taxes. So we add that as an added on service, and then we talked about helping you guys with doing that as well. So that way we can look at it and figure out how to set up those entities, how to set up, you know, whether it needs to be trusts or whatever it is, to start moving things around to save them money on taxes. Because when I look at it, and I'm sure you handle this the same way, when we have a client that has a tax problem, we want to look at everything. You know, and sometimes we get the argument, well, why do you need my wife's information? Why do you need to look at the business? Why do you need this? It's because when you leave us, when we finish with the resolution, whatever it may be, we want to leave you in a better place. We don't want you to have that tax problem in the future. And that's something a lot of practitioners, and I think a lot of practitioners don't understand, especially when we're working in the resolutions phase. there's people that go on a payment plan that have self-employment income, and their payment plan's up here, but it really should be here, because that delta between their payment plan and where they, in my opinion, they should be, is their estimated taxes for this year.
Mm-hmm.
Because if you pay your estimated taxes for this year, we can lower your payment plan, because that's an allowable expense. And next year, you're not gonna owe additional taxes. You're not just kicking the problem down the road. Like,
I also look and see if they have insurance, make sure that they have health insurance, and maybe if they have kids, maybe life insurance as well.
well, life insurance is important. We had a recent case where a guy had, he owed the IRS, and his payment was going to be about $1,200 a month. And we went back and said, talked to him, and this guy's driving a 2003 pickup truck. And, I asked him flat out, you're gonna need a new vehicle. And so we went and we looked at it. So he was able to purchase a new vehicle.
Nice.
Made his payment plan almost exactly at $640 a month. And that payment for that vehicle, now he had no equity in that vehicle, and he was able to use that payment. So his payment plan was actually set up around $500 something a month.
Nice.
On a partial
And
payment.
now he had a reliable car.
And now he has a reliable car. He set himself up for the future. So now he's got a good car he can drive. He's got everything he needs to move forward in life. And, he's invested that money that would have gone to the government, and we don't know where they're spending their money. I'm not gonna get into that, but instead he was able to invest it in himself and help himself and put himself in a better position.
Yes, there's a lot of strategy, whether it's on fixing the tax problem, preventing tax problems, or even somebody who maybe has dealt with tax problems, or not even, it's trying to not have tax problems by paying the least amount that they legally have to pay. There's a lot of strategy and a lot of very specific training that we go through to get to these strategies, to get to these methods of helping the taxpayers. And I think when I was just a CPA, I did not have that training. I did not have exposure, whether it was in school. I teach tax accounting. That training is not part of the curriculum. We might spend half a chapter on IRS procedure. That's it. And CPA exam has very little tax procedure as well. So that we don't get exposed during our training to resolution work, to tax problem resolution. So that's why I think it's so important to work with somebody who has that training, who has that experience. You said you work a lot with other CPAs. When I work with CPAs, I like to give them a non-compete and non-solicitation agreement, so they know I am not going to go after their clients. Even if the clients want you, they have that peace of mind, so that we can then enter into a partnership and work together to help the client. And instead of being a adversarial relationship, it is a cooperative relationship. I'm sure you work with a lot of CPAs as well.
We do. We get a ton of CPA referrals. I'm not a lawyer, so I don't write the form because I'm a little old school.
It's a handshake.
It's a virtual handshake. Okay. It's a handshake. And
we have to document everything. So.
My word is my bond. And I asked somebody the other day. They're like, "Well, what makes you? Why would you not do this?" I'm like, "Well, first of all, my reputation means everything to me. I mean, look at our reviews on Yelp. Look at our reviews on.
You'd rather keep working with them.
I'd rather keep working on than lose that relationship. So for us, it's and I don't want their clients. So let's just be honest. I don't want tax prep. I don't want to be doing that kind of work. I would rather, my time is better spent fixing people's tax problems and helping them move forward, and let the people that are experts, the CPAs that spend, when I go through my, we have continuing education. So my continuing education, most of it's spent on the tax controversy side, learning what's happening at the IRS, learning what is going on, how is it going to affect, why did they change the 433 form, what did they add to it, why the penalty abatement, what are the different categories now, and how, these little tweaks that the IRS are doing, and how I can get better. And every time I go to a class, I learn something new. I learned about getting rid of penalties after they've paid their taxes, quite a few years back, and it was something I really just didn't understand that portion of it. And we learned this, and now I apply it all the time, and we're able, if someone's paid their taxes, we can go after their penalties for failure to pay, because that is an administrative penalty, not a title penalty. So it's not coming from the U.S. Title Code, it's an administrative one. So there's a lot of things that we learn every day by studying and doing what we do, that your CPA or your tax practitioner who's studying every year to continue their education. And I love CPAs. There are CPAs a general licensure in accountancy, so it covers accounting, it covers corporate accounting, and audit and taxation. Whereas that's a big umbrella that you can learn and study under. Whereas an enrolled agent or like those who practicing tax law, it's very specific.
Yes.
Our training is very specific. What we're doing is very specific to make sure that we have the knowledge to be able to help our clients do better. And I'm going to ask you a question. My favorite one I get a lot is, why don't I just pull money out of my IRA and pay it?
Oh my goodness. All right, so first of all, you're going to owe tax on that money. So you're just going to get further down the hole, right? So further into that, yeah. But also, the IRS is not likely to force you to take that money out to pay the taxes. And you're going to need that money later in retirement, unless you don't need it. But chances are, I want to keep my money in my IRA. So what is your take on that?
Oh, it's the same thing. I tell them, I'm like, all you're doing is taking a problem from here and moving it to a current problem. And then we talked about the expiration date of the statute. Now you've got a new 10 years the IRS can collect from you.
Yes.
And let's say your income has been going like this on the positive, so now you've created a new problem as your income is going on the positive, that now you're going to end up full paying that. Plus, if you're under 59.5, you're going to have the 10%.
Or the job penalty.
All those are going to apply, and it's basically costing you more money. Whereas, we can put you on an installment agreement that, even if you're on a partial payment installment agreement, you qualify right now for it. And let's say you have a net change in net positive income, which would technically take you off that partial payment installment agreement, but you now have more money that you can pay on those taxes. You can pay down those taxes in the future. We want, especially with business owners, I'm trying to control your cash flow. And I look at the IRS right now, the IRS interest rate is 7, and then your failure to pay penalty if you're on a direct debit installment agreement is 0.25. So you're looking at an overall annual APR of 11%. So can you go get a loan right now for less than 11%? If you can, great, get it and pay off your taxes. But if you can't, that's not a bad loan that the IRS is basically letting you, give you a loan to go do what you want to do and keep your money in your business, especially if you have a business that you need that cash flow to make your business grow so you can do things with it.
And you mentioned IRS developments.
Yes.
We are in March 1st. Today's March 1st of 2025. And we just had 6,000 people or so let go.
Some people right?
I love
and
people I know. Yeah,
we know personally. Yeah, people we know personally.
We're hiring, by the way. We're hiring enrolled agents. So if you just been let go by the IRS,
give us a call. We might have a spot for you.
Right. So, what do you think? I'm terrified for the taxpayers. I'm worried for the taxpayers, and who I'm worried for. I'm worried for the people who cannot afford to hire us. I'm talking about, the bus drivers, the cafeteria lady, the people who cannot take time off work to sit on hold for hours.
Mm-hmm.
If there's a tax problem, they have maybe something went wrong, who knows, something went wrong, they filed their taxes, something went wrong, and now they're getting letters, and they can't take the time off to be on hold and call the IRS.
Well, I know you use it, and we do too. Part of the reason, and we talk about fees, things like that, is we pay.
I pay somebody to sit on hold for me.
And there's, we have software
Yeah.
that, my software, I can pull set flags on someone's return, or can set flags on their account. So if something is going wrong, I get notices. Like literally, we sit down. Christy looks at me, and we sit down with my tax software, and I said, this person is in this status. This person's, and we can see it right on my software, which we pay a lot of money for that software to be able to do that, rather than pick up the phone and wait on hold for the IRS to tell us that this is what their status is. Rather than pick up the phone, normally today was a special day, or yesterday was a special day. I sat on the hold for almost 35 minutes and still didn't get to special compliance. I think they're super busy right now, or they're closing down the section, or they let everybody go. I don't know what happened, but we keep getting reverted back to an area called ACS Collections.
Automated collection.
Yeah, and we acronyms. So we get to them, and they're not, and they can't answer. They can't deal with that client's case. So then they put me on hold and transfer me over to the department that I need to speak to. And that is what's key is for us is we're able to understand, because in my office in Colorado, I have a map of the IRS collection processes, and it's crazy. It's huge. I know you go scroll down in some of our stuff, you'll find it, but it's just.
I tried to post a picture of that once, but it's too big for a picture, because like the map is so huge.
Yes.
That you cannot put it into a picture you can see online.
Yep.
Without zooming in.
And you can actually find this. It's actually on the Tax Advocate website, and you can say the IRS processes for collection, or the processes for its map in there. It's in the IRS Tax Advocate website. You can find it, but it's crazy, and all the stuff that does. And Lucy and I, we understand that. Like, in our employees, they all get it. They know where things are at. Like you tell us this is what's going on, and we know exactly where you're at in that process, and we know who to call. Key thing, we know who to call.
Yes.
If you're calling, is it 888 or 800 tax 1040, you're getting a general answering person. You're getting someone that's on the phone. Maybe they have very little training. They're not in probation because all those people got let go. But but they're overworked. They're on the phone and they're trying to answer your tax question, but they can't set up an installment agreement. That has to go to a different department. They can't deal with. You're getting a letter because you forgot to put something on your tax return, and they're not automated under reporting. I actually said their real name, but they're not in that department. So, but when we see a letter, we know, because we've been doing this for so long, exactly who to call.
What to do next.
What to do next, and what the next step is. So, when I get asked, why do I need to hire you? Well, first, we know what we're doing. To put it bluntly, we know what we're doing. I could build a house. My dad was a contractor. I helped build houses as a little kid growing up. That's what we did. And I could build a house, but next week if the wind blows, that thing might fall down.
Yeah.
And or I can fix my car, and my wife would be driving down the road and there'd be oil on the ground. She'd have to fix it because she's got more experience than I am, but just be honest. But there's things that I could do but I shouldn't be doing. And it's just like I equate it to, especially sitting next to a lawyer here, I equate it to going to court to fight something, if you're wrongly accused, to fight something by yourself without a lawyer.
Don't. Just don't.
Just don't.
Yeah. And for me also it's a matter of time. Like, I could cut my lawn, but it's not the best use of my time. I work with a lot of attorneys, and whether it's through compliance or tax problems, the time that it would take them to resolve this compared to their hourly rate and money that they could be making, it is a lot more affordable. Makes more sense for them to hire somebody, outsource that service, than try and do it themselves. It will take them a lot longer, cost a lot more.
And the stress, like
Oh,
just
yes, the
the stress. I mean, we get people that call us, and you know, sometimes I get it, and I'll look, and it's just like, just breathe, okay? I get on the phone with them, and I can hear the anxiety
Yes.
in their voice, and I'm
Yes.
just like, okay, stop. Just do me a favor. Take a deep breath. You've
Yeah.
got me on the phone now. I can fix this. I just need you to breathe
Yeah.
and let us work through this for you. Let me go to work for you.
I really love that conversation, letting the clients know that there's a light at the end of the tunnel. There's a solution to this. There's a solution to this problem. I really enjoy giving out that information and making them feel, because like you said, they make them very stressed, afraid, sometimes in tears, and thinking that there's no way out, to have to pay, they're gonna take my house, they're going to take my, money and to go to jail, and we're going full circle now, right? Yeah, or take my paycheck, take my social security. I really love telling them, look, there's a way to fix this, and we can help you.
And the IRS doesn't want your hoopty. I mean, they don't. They don't want your old car. They don't want to take your house. It costs them more money to deal with that stuff. The level of seizures is so small because it costs them so much money to deal with that. They would rather you get into compliance. They'd rather you work with someone like us that's going to help you fix your tax problem than them have to go and take things.
But they will take your bank account.
Oh yeah, they'll take your, or your pay. My favorite, we do estates a lot. So there's certain states that once they start going after Colorado, once they start
Is
taking
it Hawaii? Is also good.
Colorado, Hawaii, once they start going after your bank account, or they go after your paycheck, if they put a levy on your paycheck, you're not stopping it until that tax debt for that year that they're levying you on is paid off. So again, this is the importance of going to someone who's qualified and experienced, especially like we work a lot here in Hawaii, and we work with clients that are in the process.
Literally powered off.
Okay, that was that.
Here, plug in that other thing to the back of it. This is for the Hawaii people.
This thing has been not nice today. It's a hole, baby, not a slip.
It's funny.
I don't know why I'm here, by the way. You took all my questions.
I'm so sorry we did take your questions.
Now you
Christy.
can't excerpt it with the questions. So I'm just saying.
That's a very good point. Yes.
It's got charge. Look at it.
It's 4%.
You was picking it too.
Do you want to just wrap up?
Oh, let's. I want to do that Hawaii segment
Okay.
because that's important.
Okay.
Maybe Christy can ask what it's like working with Hawaii
There you go. All right, Christy.
Department of Revenue or whatever the.
Oh, I thought you meant the fact that we work and we don't enjoy the pool or the beach. Oh, no.
All right, Christy.
What is it?
What is it like working with the state of Hawaii for taxes?
Okay, so what is it like working for the state of Hawaii with taxes?
So, we have an office here in Honolulu. So we deal with a lot of state tax issues, and the state of Hawaii, once they start levying your paycheck, they don't stop until that year that they're levying for is complete. So most recently we had a client came in and they're currently levying for 2008 and 2009. we're catching them up on their filings, that other year's filed, so we only have to file the last 4 years. And if we filed those returns right away, then what will happen is that state levy will just get added onto.
Ooh.
So their balance will go on, and they'll keep levying until they pay the entire balance. And they'll take 25% of their paycheck, and it'll keep going. Or, you know, and this is where it's important to go to somebody that knows how to work the system, that knows how to.
Or with that state in particular.
Yes, strategically work with states to know that we're gonna hold off, we're gonna file the federal, we're gonna get those done, because I can deal with the federal, we can stop wage levies with the federal, you can stop garnishments with the federal, there's things we can do. But the states like Hawaii and Colorado, once they start levying your wages, they don't stop until that, whatever their levy's for is finished.
It sounds like Hawaii is a whole different ballgame from other states.
It is. It's a different ballgame. Well, every state's different. Every state has their little nuances.
That's true. Yes.
But as we.
But some of them work out pretty much the same. Like they all do the same, you know, the same processes. But it sounds like Hawaii is a lot more aggressive.
I would say it's passive aggressive. It's casually aggressive.
I like that.
Like they gave you the
It's a
letter.
good way to put it. Yeah.
You know, and this is the argument we get all the time. Well, your client received a letter on this date, because they can break down the dates of the letters. They received a letter on this date, they received a letter on this date, and they didn't respond to either of those letters, so we started the wage levy, and now it's going, and we can't stop it. But if we gave them additional liability, then by filing the current tax returns that are due, but if we gave them that additional liability, then we're just adding onto their balance. It's going to continue to be levied, whereas let's say they're 1 month away from, with their wage garnishment, paying off that original liability, we hold those tax returns, let them get off the wage levy because the balance has now been paid, and then we submit those tax returns and we enter them into an installment agreement for a much lower amount that they can afford. Because again, it's all about what they can afford.
Right.
And when we work with clients, we want to make sure we cover what they can afford. And it's not a 1-for-1. If you're paying the state $300 and you owe the IRS money, you don't get to deduct $300 off of what you can pay them because of, you know, paying the state's allowable. It's based on the percentages of what they owe, and then, you know, years matter, dates matter a lot. So, and then some states, you know, don't have a collection statute date, so they just will collect forever.
Yeah.
So
For me, the worst are California and New York.
Yes.
Those are very aggressive, and I don't love working with them.
It's the power.
Did you move it again?
No,
Oh my
it's
goodness.
powering. It's press the computer.
The computer. Oh, I know. That's what it was. The computer has to stay on. The computer has to stay on. That's why.
Press the power on this side.
Hmm?
That finger.
Here?
Yep.
Should we wrap it up?
Yep. Let's wrap it up because we have pulls. We have
Yes.
pull time.
Yes.
Pull time. Pull time. Pull time.
Says it's connected and everything.
Oh,
Turning off.
it was still on.
Oh, it wasn't recording.
Maybe.
This iPhone is super reliable.
Carly, you owe me. You owe me big.
Well, I don't think this one will just come.
We're not
back
getting
on.
a closure, are we?
I don't think we're gonna get a closure on that. All right, let's do a closure for that one.
Okay.
Okay, so bottom line, we've had some wonderful time,
Yeah,
and
yeah.
it's definitely been fun talking about how, even though we have different firms, I mean, the training, my training is I come from being an auditor as a background, so.
And you are actually an auditor in the service.
Yes, I was an internal auditor, so that's where my background. I actually used to teach internal auditing. I taught at that level, so my background is very different. I have a lot of management background, so for me it's a different look, especially when I look at businesses, how I think, rather than your normal CPA like yourself has a different training. At one point I thought I'd be a CPA, and I'm like, I don't like pocket protectors, and I don't want to sit behind a desk. So now we travel all around the country, my
You
wife
do
and
have
I.
a really nice life. You guys have a,
And I want to be clear, and we get this all the time. I'm sorry to interrupt you while you're on vacation, is the comment that I get from people when I'm talking to them and they ask me where I'm at today, and I tell them I'm in Waikiki, or I'm in Honolulu, or I'm in Georgia, or I'm in Cancun. And if you actually follow our Instagram and stuff like that, you'll see my wife and I working. If we pan over here, there's computers set up on the table. We're changing our view.
Okay.
And yeah, maybe we get to go out and enjoy the sunset and get to enjoy the fireworks here in Waikiki last night with a beautiful dinner, but we are putting in the work no matter where we're at. Whether we're on the back of a Harley and I'm pulling over at a rest stop to have a consultation with the IRS. We took an appeals conference by the side of the road. I think I told you about that one. Since showed you a picture of bacon there. And then the other day, I knew during my layover between my two flights, I had an appeals conference set up, and this one was like, the IRS would not process a return. It was stuck in processing, and it was the 2018 return. And now we don't need the 2018 return to be in compliance. So, but the revenue officer I was dealing with would not allow the installment agreement to start because it was back in November and December. So we filed the appropriate forms to basically create an appeals hearing, and literally sat down at the airport, flipped open my computer, found a secure spot, because we always have our phones with all the security, we do all that. Found a secure spot to talk to him on the phone, pull up the information. Appeals officer calls me, I tell him we're just trying to get an installment agreement. You already have this, do you need me to fax you the 433D again? Everything's there. They were not in compliance in November when we were trying to get this done, because the IRS still has not processed their 2018 return. And the 2018 return is already in the file, so you can see what they owe. It's a very small amount. Add that to their balance and let's move on. Like, let's get this done. And the appeals officer is like, I'm gonna talk to you for a minute. I need a few more like you. And meanwhile, I'm looking at my wife. We're like, we need to go get snacks before we get on the next plane. But okay, what other questions you have? I just need a minute to document all this. So literally, we sat on hold while he documented everything, and got photos. Said, okay, we'll send you a letter, and we'll get this started for you. But it's a matter of knowing what you're doing, and that's what allows us to be able to work around. And we have an amazing staff, by the way. Our girls are the ones we have. Is just they take care of everything for us and allows us to do what we do. And then of course we have you to help out with other things with tax court filings. And so, we just surround ourselves with great positive people that allow us to be able to do what we're doing. And it doesn't hurt to travel with my beautiful wife to do
oh,
things.
I'm so lucky.
Yes, unspoiled.
So lucky.
Peaceful. I have another question that we get often, kind of circling back around to the CPA licensing, and also you mentioned California, Hawaii, Colorado. People always wanted to know, can he help me with my state as well? Can you kind of explain quickly like what the difference is with your licensing so that allows you to do that?
Okay, so first, I'm an enrolled agent, which is the IRS is the one that issues our exams, and that's kind of where everything generates from. So my license is very specific to tax. Our test that we take to become an enrolled agent deals with taxation. It deals with corporate tax, and it deals with procedures specifically regarding, and as Lucy had mentioned earlier, you don't teach that when you do the CPA training, teaching someone to become a CPA. Well, to become an enrolled agent, you actually have to study and understand procedures on how those all work, which is, you know, the 433, the what's an 821, what's 2048, how do these documents work and what are they about? So having that license is a federal oversight. So we deal with clients across the country, some international that are US citizens, and that's what we get to deal with. And by being with my license, I'm able to jump to different states. Lucy, will you explain yours and how the difference? I mean, I guess
Yeah.
is the key.
So CPA license allows me to work in every state and at the federal level. As an attorney, we can practice federal tax anywhere, but when it comes to a state and interpreting the laws of a particular state where we are not admitted to practice, it's a little more tricky. We have to be careful that we are not practicing law in a state we are not admitted to practice law. So for example, here in Hawaii, I would probably not advise a client on interpreting a particular operating agreement. I would not, I would be practicing law in Hawaii, interpreting Hawaiian law, for which I am not, where I'm not admitted to practice. So we have to be very careful how that, whether I am practicing accountancy or law, and navigate that. But having the CPA license allows me to do work in just about every state, in every state.
And just about, well, and that's the thing, is like for a CPA, you're licensed by your state. So what state are you licensed?
I'm in Texas.
She's licensed in Texas, and every state has different requirements, and some have other things you have to do in order to work, whereas I don't have that limitation. And so that's kind of some of the advantages that we have by having a physical location in different states. I can circumvent that licensing requirement that other people aren't able to do. So that allows us to be able to flex between different states, and especially when I have a client that has multi-state tax issues, I'm able to work with those multi-state tax issues and get them corrected. And that's another thing that, you know, we talked about some of the big firms. A lot of them, they don't do state. They leave you high and dry. Like, it's like, we're gonna fix your federal tax problem, and then you're thinking everything's wonderful because they did something, you know, they threw it against the wall and it stuck and it worked, and then next thing you know, they did not touch your state problem. And that is the difference between my firm than a lot of other ones, is because we do take on the state. We do work with state tax issues, and again, like we talked about specifics with here in Hawaii, and the difference in California. My practice started in California, so I'm very well versed on how to work with California. Some states drive us nuts, like Colorado. I can't go online and see your stuff. I have to pick up the phone and call them every time. It's job security, but I have to call them to get numbers from them, whereas like Hawaii, and it's the exact same website system, which cracks me up. And I can go on Hawaii Tax Online and I can see all my clients' information. But Colorado, I'm required to pick up the phone and call. California, I can go on and see their stuff, but then their requirements to get my power of attorney through is like, it's getting a root canal and then them polishing my teeth afterwards, because we file the power of attorney, then, you know, your client signs the power of attorney, gets sent in, then the state sends them a letter, because they're all about reduction in the paperwork, but then they send them a letter that they now have to respond to with the special code to authorize us. So we found some workarounds with it, where we have the client call before that letter gets sent out and they can authorize us. But it's just, there's so many things that you just don't know unless you work in those states. And so that's the key, is for us, is being able to work in Georgia, being able to work in Texas, which is no state tax, but being able to work in Colorado, where we have an office, here in Hawaii and California and Utah, we're able to have experience in these different locations, which helps us. And you know, and we have to go check them out. We have to go travel to them. And, you know, my wife gets to travel with me, so she shakes her head. But you know, I would like to just thank Lucy for being here with us, and we do appreciate you taking the time to watch this video. I know there's going to be sections that are going to show up in different locations, but we really do appreciate you. And
Thank you.
you know, it's been lovely to have you out here, and thank you again for all the
guys.
help. And you know, we get to bounce ideas off
I
each
love
other. And
it.
that's our favorite part.
I love our conversations.
And
Yeah.
an occasional Mai Tai.
Yes, yes.
So thank you again for joining us. I look forward to working with you soon. And like I said, you know, give either of us a call, and we look forward to working with you. Aloha.